Hi, and welcome back to the continuation of this deep dive into super microcomputer. And now it's time for the technical analysis and maybe a quick macro overview as well, looking for mainly headwinds, things that could be a hindrance to our forecasts and to our case for the stock. So, technical analysis, what is it really? Well, it's about finding useful, reliable enough trends that other investors are creating as they jostle for maximum returns. So remember, what is the market? Well, it's a lot of other players trying to jump between different asset classes and different stocks in order to find the one that's moving now, that is undervalued now, where they try to catch on to trends of yet again other investors. And so we want to see if there are any trends here that look strong enough, reliable enough, not jagged, not too jagged, but something that might give us an idea of whether the stock is going in a certain direction or not, or if it's maybe it's likely to reverse its current direction. The things we are looking for are stock price channels. So if you see a stock moving in a certain pattern, up and down with rising peaks and rising troughs, then that creates a kind of a channel that it's moving in, and it's created by weak hands and convinced buyers and desperate sellers, etc. And together that creates sometimes, not always, but sometimes a more or less stable price channel, which could give us an idea of whether it's a good thing to buy at the bottom of the channel or at the middle of the channel, or maybe if it's actually a falling price channel, then maybe you should just refrain altogether from getting involved. We are also looking at, for example, the 200-day moving average. That is the gold standard in technical analysis. That is the first thing you should ever look at in order to try to establish a more long-term stable trend. For many stocks and for many indices, it's a pretty good indicator of the long-term sentiment among a huge number of investors. It's, as we have seen in numerous of these videos, it's not perfectly honored by most companies, but it's better or worse honored from depending on which company we're looking at. Here we're looking at super microcomputer. This is the stock price since 2022, and the circled line here is the 200-day moving average. And if we had heeded the 200-day moving average, we would have been enticed to buy it anytime it was above the trend here. We might have bought it here, caught this strong uptrend, but then again, had we bought it here when it was far away from the 200-day moving average, it might have crashed down again and tried and started challenging the 200-day. But anytime here, we would have actually gotten kind of a buy signal from the 200-day moving average, which would have landed us this meteoric rise. Again here, when you're very, very far away from the 200-day moving average, you would probably have gotten a kind of a warning signal from not least the Bollinger Band, where it would have just screaming, you are just creating a wider and wider Bollinger, and you're very far away from your 200-day moving average, and unless you're very cheap, you are more likely than not to come crashing back down sooner or later to your 200-day. And this is what happened. And not only did it come all the way down to its 200-day moving average, somewhere here we might have actually been considering buying it, but once it went down below the 200-day, it's a pretty weak signal, and especially after trying to recapture it, as I have often pointed out, and failing, then here is a really actually a negative signal from the 200-day moving average view, which again, remember, these things are not factors that you can base a buy or a sell alone on, but they are slight additions to your actual fundamental case. But anyway, here would have been a negative signal, which worked, and here would have been kind of you could have been fooled into buying here, even though you shouldn't have. But now again, we have been below for a while, recaptured the 200-day, challenged it a couple of times, and now we are above the 200-day, and the 200-day is just actually starting to create a positive trend in itself, the 200-day moving average. So this, I would say, this is a positive signal. We are definitely having a tailwind, a positive tailwind from the 200-day moving average. And this is a stock that has had a tremendous performance. Remember, it's the best stock in the S&P 500 over the last 5 years. It's better than Nvidia, and it's nevertheless at just a third of its price it had 18 months ago, and it's now just recently went above its 200-day moving average. So we have a clear go-ahead signal from the technical analysis. And the Nasdaq, it also looks very strong. Remember that we had this very weak market for the first quarter, and then a strong bounce back. The Nasdaq is also, I mean, it's longer-term straight trend. Also looks very stable. It looks like simply that this spring turmoil was more or less just a false break, albeit a pretty large one, but still just a false break. Looking at the Nasdaq right now, you might think that there is nothing going on macro-wise in the world. I don't know what people are talking about, maybe tariff wars, maybe World War III due to the bombings of Iran's nuclear facilities, etc. But the stock market is having nothing of that. It's just saying we are at all-time highs, there's nothing worrying going on in the world. So we have a clear go-ahead from Nasdaq's technical analysis as well. And then we could take a look at a few of the macro pictures. Variables that I tend to point out are market valuation levels and trends. And yes, the market is very expensive, but again, remember that that has two sides to it. The downside, there's a downside risk to the valuation levels, but there is also, of course, an upside magnet for multiples, which means that we could probably tolerate and expect higher multiples on average, just because the market is expensive on average. And that means that other investors, they will jump back and forth between different assets and stocks, depending on which one is the relatively cheapest, and push multiples higher than usual, because the market is much higher than usual. So it's not just a negative to have an expensive market, at least not short term. We do see the macro picture weakening a bit, but that also means that stimulus is likely to come sooner or later. And I think Trump has definitely shown himself to be a dove in terms of stimulus. I mean, he's presented his big ugly deficit bill, which with more deficits than ever in the history of the planet, and is also pointing out that he does not like the Fed's too hawkish views and too hawkish interest rates, too high interest rates. So there's definitely coming some kind of stimulus program sooner or later, although maybe with a delay. And we have market interest rates. They are moderate. Sure, they are higher than the last 15 years, but they are moderate from a long-term perspective. And the Fed is turning dovish. So I think this is also a tailwind. So we have tailwind from both the macro and the TA.